The next important pattern that we are going to talk about is anchor break. So when we talked about momentum, when we have those marubozu kind of a candles, or we have those huge anchor columns formed in point and figure chart, or we have those tall bars which are formed in case of candlestick patterns. So wherein there is a strong momentum, that's why a big bar is formed or a big candle is formed, or there is a continuous movement in the bullish or the bearish direction. That's where anchor bricks are formed. So we have bullish anchor bricks and we have bearish anchor bricks. In case of bullish anchor bricks, there would be more than 10 bricks which are formed in one single string. So that particular price action, back to back there are 10 bricks or more than 10 bricks formed in one single diagonal fashion, and there is no pullback during this. So imagine if Nifty 10 points chart is what we are using, or a 10 brick chart if we are using, 10 bricks back to back printed in one direction means 100 points of a move in one direction. In case of Bank Nifty, if we are using a 35 brick chart in Bank Nifty, 10 bricks relentlessly in one direction means a point move of about 350 points in Bank Nifty. Imagine the strength in those bulls, wherein prices are just not, the bulls are just not allowing a single brick pullback as well. That's where the anchor brick gets printed. That's the beauty of momentum, and we can capture this momentum in the Renko bricks with the help of anchor brick pattern. Now after the anchor brick pattern, if you see a small pullback happening, so there is a strong momentum, we know of the underlying momentum because relentlessly there are 10 bullish bricks which are getting printed. In case of bullish anchor brick is what we are discussing at this point in time. A small pullback. The pullback could be in the form of 1 brick bullish pattern, 2 brick bullish pattern, or maybe in form of a zigzag pattern. The pullback could be in any which ways. Usually zigzag may not be seen, but 1 back and 2 back are usually seen when we have anchor brick pattern which is getting formed. So that tells us that the momentum is bullish. Pullback is by just 1 brick. We can look at participation, or a small pullback maybe of 3 bricks or 4 bricks is what is happening. After 10 continuous bricks in one direction, maybe a pullback by 3 or 4 bricks. The reversal brick which forms out here, the bullish brick which forms out here is your entry brick. The stop loss is just 1 brick below that bearish brick from the last pullback swing that we have, the bearish swing pullback that we have, and then we can look at the target on the upside. We can use our targets with the help of the formula that we already know and find the targets for the particular setup. So this is a chart of Bank Nifty that you see in front of you. Here the brick size used is 70, and you can see this anchor brick which has got more than 10 bricks which are printed in one single row or one single string. There is no pullback happening at all. So there is a strength, there is a momentum on the bullish side. After the anchor brick is formed, a small pullback. The anchor brick can have 10 or more than 10. Need not be specifically 12 bricks, 13 bricks. It could be anything 10 and above marks an anchor column. So a pullback, and then that reversal brick that you can see where I have marked that this is the entry area. The stop loss is very small, just 1 brick below. Already we know the underlying momentum is bullish. We are trying to make use of the objectivity of Renko charts, and we are trying to take a trade at a small reversal that we can see, so that the stop loss is also affordable out here. Example of Bank Nifty is what you see on screen. 10 bullish bricks in one string, a small pullback. The reversal brick gives you an entry for the bullish side. The stop loss, which we should never forget for trading, is 1 brick below the bearish swing, that the bearish bricks that you can see on the chart. The next example is of Nifty. You can see those more than 10 bricks in one single row, a pullback. So here a 2 back pattern which was formed, and the swing breakout is what we can see on the chart is getting printed. The reversal brick is where we could take our entry and participate in the momentum. So if you remember in the first, when we started the discussion of Renko charts, we talked about Renko charts, which are so beautiful. They help you to find your momentum, which was with the help of 1 brick and 2 brick, and participate in the momentum trades. So a continuation pattern rather. They help us to find momentum. Where is the momentum? Anchor bricks will tell you where the momentum is. They help you to find reversal. So they are beautiful charting tool that Renko is, and helps us because of the construction. Rather, this diagonal construction which you see in Renko charts bring in more of objectivity, or visually it's easier to discriminate that particular trend, or easier to identify what the trend is. So the beauty of the construction, the diagonal construction of the Renko charts, bring in that beauty for the understanding the direction, understanding what the trend is, how the bricks are constructed, and finding the entry and the exits or the stop losses for the particular setup. Next example is of Nifty 10 brick. 10 brick is what we have used out here. I have also identified how to look at the target with the help of anchor bricks. So similar kind of a setup, similar formula is used again to find the target. We have a bullish swing of more than 10 bricks in one particular relentless bullish manner, a pullback, and that reversal brick is where you take your entry. The swing breakout is where you get your confirmation for the trade. Swing breakout plus the number of bricks in the swing multiplied by the box size. The formula remains the same to find your swing extensions or the multiple swing extensions that we have used to find the targets. Stop loss is very minuscule out here again. This is an affordable or a low risk entry that one can use in the direction of the momentum of that particular trade setup. Next example is of anchor brick. We are talking about bearish anchor bricks. So bearish anchor brick, relentless, more than 10 bricks formed in one particular direction. This is a Nifty bank chart that you can see. It's a 70 brick chart. So every 70 points, a new brick is printed in the bearish direction. More than 10 bricks, an anchor column. We know that the momentum is on the bearish side. I have also used moving averages out here to discriminate or find the trend. So a 40 brick moving average is above the 20 brick moving average, which again confirms that the trend is bearish. Plus the momentum is bearish because the anchor brick is forming in the bearish direction. A big swing is what we can see out here. A pullback, and that first reversal bearish brick is where you get your entry. Your stop loss is just 1 brick above the bullish swing, and the trend continues in the downward direction. Another example of Nifty, which is Nifty 10 brick chart, is what you can see along with the moving averages. So 40 and 20 is the moving average, double moving average that we have used. Double moving average indicating bearish trend, anchor bricks, bearish anchor bricks indicating momentum. So the trend is bearish, plus it's a strong trend. So both the indicators telling us that we can participate in shorting bank Nifty at this Nifty at this particular point in time. At the reversal brick, 1 brick above the bullish swing is where your stop loss will be, and then the continuation of trend in the downward direction is what we can expect.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.